Besides football, Messi and Maradona, what else can you think of when I say Argentina? If you are thinking of inflation, I think we are on a good start. Argentina's inflation peaked at a whopping 20,000% in the March of 1990. Argentina's inflation is still super high. It faced a massive 287% inflation in 2024. You heard me right, 287%. A loaf of bread that costs 100 today will cost 387 only a year later. Can anyone's income grow at that rate? Just like that, inflation could push a middle-class family to below the poverty line. In fact, more and more people in Argentina are finding it difficult to make their ends meet. Thousands of pesos can hardly buy you a day's groceries, and inflation will further erode the value of those thousands of pesos. Peso, by the way, is the Argentinian currency. And if that is the case, currency notes of 10, 50 or 500 are hardly worth anything. The highest currency denomination in Argentina was a 2000 peso note until 2023. To help ease the burden of carrying too many notes, in early 2024, Argentina introduced a 10,000 peso note, a 5x jump over a 2,000 peso note. And soon after, in less than 6 months, it also introduced a 20,000 peso note. But why does a country need such high denominations? What caused this situation? Here's a quick drill down. Argentina has struggled with inflation for decades now. Between 1944 and 2024, Argentina's average inflation rate was 190%. Let that sink in. The average inflation rate over 8 decades was 190%. This data is according to Trading Economics. Now, what led to such high inflation? See, every government helps out its population, especially those suffering from poverty. Free distribution of food items, subsidies on essential goods, and cash handouts are common ways of enabling the poor. But these are all expenses for the government. It will have to buy the food items that it will distribute for free. In case of subsidies, it will have to make partial payments to the manufacturers. In case of cash handouts, there is direct cash outflow. These are all called fiscal expenditures for a government. The government must earn enough money to be able to pay for these fiscal expenditures. If it does not earn enough, it can borrow. The easiest way for the government is to borrow from the country's own central bank. Let's not get into the details of how that works, just that borrowing from central bank involves printing money. Nothing wrong with that. Every central bank prints money every year. It becomes a problem if they print a lot of money and if they continue to print a lot of money. Aggressive money printing brings more money in the hands of people and businesses. When they have more money, they demand more goods and services. And as Economic 101 says, more demand leads to higher prices. So if money printing is rampant, price hikes could be rampant and inflation could break out of control. Argentina has been printing loads of money for decades now. The free goods, subsidies, and cash handouts that I spoke of earlier are also a political weapon. Politicians like to give out freebies to the public. The public also likes to vote for politicians and political parties that give out more freebies. But more freebies, like we know, create a financial burden on the government. Sooner or later, most governments across the world have realized that incessant money printing is not a solution. However, historically, various politicians in Argentina have resorted to money printing to hide the massive amounts of money they spend on appeasing the population. And as the Argentinian population was reeling under inflation fueled by a money printing spree, politicians kept fattening their fiscal spending budgets. They kept printing more money to pay for their fiscal carelessness. The loop continued and the peso kept losing its value. If you think that a 20,000 peso note is a bit too much, it is just about $19 or a little less than 1700 Indian rupees as of this recording in February 2025. That is how much inflation has eroded the peso's value. Javier Milei, who became the president of Argentina in 2023, won the elections on the promise of reining in inflation by introducing a host of austerity measures. Now, what are austerity measures? These are measures meant to improve a government's financial health. It can be done in various ways, but all those ways can be summarized in two broad categories. 1. Hike taxes to increase the government's revenues, and 2. Cut public spending to conserve cash. Higher taxes or fewer freebies might come as a shock to the public. They may not really like such sudden big changes, and it could become a political disaster for the government implementing the austerity measures. As far as Javier Milei, the new president, is concerned, he introduced a host of austerity measures to reshape Argentina's economy. He devalued the currency by 50%, slashed fuel subsidies, and also reduced the number of ministries. All these measures seem to be in the right direction. Within a year of Milei assuming office, Argentina's inflation has eased from over 200% to about 110-120%. That's a good step forward, but that's still a very high inflation number. Only time will tell how Milei's policies play out. As part of Zerodha Varsity, an education platform, I wonder what it is like to be an investor in Argentina. What kind of returns do Argentinians expect from their investments? I have learned that most rich Argentinians prefer to keep their money abroad. Even those with limited means prefer to hold US dollars instead of the peso. Holding foreign currency at least retains their purchasing power. Argentina has also introduced limits on how many dollars you can buy in a month. However, that has resulted in a bustling black market for US dollars. They locally call it the blue dollar market. Now let me not open that can of worms. Let's wrap up this episode of Side Notes by Zerodha Varsity. Thank you.